I've been focusing on the dollar index for the specific reason that I've been trading currencies. You understand? So the thing about currencies now, let's take Euro USD for example, right? If Euro USD like this is in a downtrend, we've been actually milking this thing. So in whichever time frame you can look at Euro USD, it's in a downtrend. You understand? Euro USD is in a downtrend. I'm just gonna put an arrow to emphasize that this market is moving downwards. You understand? So you'll find that for DXY, it'll actually be the opposite of that. So DXY is moving upwards when the Euro USD is moving downwards. So that so the reason why it's even moving like this is because now we're looking at the dollar index. So the dollar index is basically a comparison of the USD against a lot of currencies, like put into one instrument, which is the DXY. So if you just look at the direction of how this market is going, even if you look at a H4 or whatever, you'll see that you understand this market is trending higher and higher and higher. So it makes sense for you to look for buys, right, in the DXY. But now, what does it mean when you go to the Euro USD, the USD, GBP USD, and stuff like that? That means on those ones, you're going to be bearish. Because if the dollar index is high, then you know that if you're trading the Euro USD, it's the Euro against the USD. So since the USD is gaining strength, that means the Euro is losing strength compared to the USD. So the Euro USD, for that reason, we're only looking for sells. This is before we analyze, look for trend lines, look for resistance zones, look for key levels and stuff like that. Just looking at it technically, you understand, and the correlation and stuff like that. So to confirm, let's also check out the GBP USD. I also love this pair, you understand. So the GBP USD is also doing what? Is also bearish. So I would actually recommend you guys to actually pay more attention to the dollar index, which is the DXY, because that's where you'll get the majority of the direction of where the USD pairs are moving, you understand, so forth. All right, guys, let's get the likes up. I want to see the likes up, you understand. I want to see the likes up in the building. So yeah, it's very important for you guys to understand that you need to pay attention to correlation. This market thing that we do, or this trading thing that we do, is not just based off of support, resistance, and stuff like that. There's other factors, you understand. I want to look at today. I also wanted to check the fundamentals, because there was quite some fundamentals, bruh. Because my trades were just getting violated today. Where we at? My trades are just getting violated today, man. Let me just pause this for 30 minutes. You understand? So as far as looking for fundamentals, guys, I've done 1,000 videos on this. I use the economic calendar on investing.com. You understand? So today, as you can see, there was a lot of fundamentals. So my trades were just getting violated today. I think I lost 2 trades today. You understand? Because of failure to actually check what's going on with the fundamentals. You get me? So now I want to pay a little attention to y'all. I want to answer some questions. You understand? I want to pay attention to some questions. So what's up? Let's talk, jeez. So PD says, love the content. I love the content too, fam. I enjoy making the content for y'all. So shout out to y'all, man. What are you trading? So currently I'm not in any trades, but today is a very sad story for me. It's a very sad story. I'm gonna elaborate now. So I was looking at the NAS100, you understand? Yo, my chat is a bit messy. Let me clean it up a little bit before I explain. So my NAS100, right? You can see this thing is moving downwards. It's a downtrend. So usually when the market is like this, for me, I only look for selling opportunities more than I look for buying opportunities. In fact, I don't really go out looking for buying opportunities unless a setup comes to me, like, you understand, unprovoked. Then I'll consider it. So today we were looking at the NAS100. I was basically using the H, not the H1. I was using my 30 minutes chart, and then I found a very quick setup. You understand? This is the setup that I found, which got violated, as you can see. It got violated, but I always make sure my risk to reward ratio is 1-to-1 or 1-to-2 to make sure that even if I take a loss, I know I'm going to recover in the next trade. But if my next trade is 1-to-2, then I know I'm going to recover and even get into profit. So that's how I manage my risk, as you can see here. So let me just add my session break. So usually I have a session break, right? So with the session break now, these lines that you're seeing there, that shows me that this was the day before, and then this is today's action, yesterday's action, and the day before. So there was a level that was being respected in basically it was an intraday session, but for multiple days, because it was yesterday and today. This level was being respected. There was also another level which wasn't really that important, but somewhere there was a level also that was being respected. You understand? And then here there wasn't really any structure except maybe a trend line, but I don't really like using trend lines like this. You understand? Because usually they just get violated. So I was looking at this structure, right? As you can see, there's a lot of wicks in this region here. There's a lot of wicks here. So that told me that the price doesn't want to think that the price isn't going to break below this zone. If so many candlesticks are touching there, but they're just wicking, you understand? They're not pushing, they're pushing below, but they're not closing below. So it kind of told me that, the price, basically this movement is confirming that the price is going to go higher, right? So obviously this was just before the market closed, and the market, upon the market open, the price rallied up to make the zone here, which I think it might have been a zone. Yeah, it basically kind of passed the 70% zone there on the fib, but I wasn't paying too much attention on that because I knew the price was gonna come back down. Well, the price came back down, but I missed. There was a buying opportunity. There was a buying opportunity there, which I missed, right? I missed this. So I only came to watch the markets today as the price was going up there, right? So as the price was going up there, I went to my 15 minutes time frame, and this is where now this thing killed me, right? So I went to my 15 minutes time frame. I know there's a zone here, and there's another zone here. You understand? And for the fact that there's a trend line here, right? There's a trend line here. A lot of retail strategies tell us that the price, if the price breaks out, is going to come back down here, and then we're going to go up. You understand? Or you're gonna get rejection candlesticks. But that wasn't what I was looking at, right? That wasn't what I was looking at. I was looking at the fact that there's a level here and there's another level here. So the price most likely is gonna respect the supply zone that's here and also the supply zone that's there. Of which now I put my SL in such a way that it's gonna cover. You understand? I don't like to put my SL exactly at the zone. I like to put it slightly above, because I know there's a thing of stop hunting. You understand? But today G just went through. It just blasted through my SL. But it was a 1-to-1, as you can see. It was a 1-to-1 risk to reward ratio. So probably on my next one I'm gonna cover this one, but on the next one I'm just focused on trying to hit it with a 1-to-2 ratio, so at least I'm in profits. You understand? Because I don't operate like this now. You understand? So I hope you guys with me so far.